if you're the kind of person who loves a new challenge, who loves, changing things up and really looking at different institutions regularly, then maybe consulting might be for you, because there's that variability that's embedded in the fact that you're constantly dealing with different clients.
Okay, another episode, another segment. And today, they say the world is a very small place, The other day when we were talking and that we come from the same place, I was like, whoa, the world is a small place. So today I have Tshegofatso Freddy Sehlapelo, who is a senior consultant at Delloite, dealing with credit risk. You know, I don't know if you have checked the questions, but before we get into that, welcome.
No, thank you. Thank you. It's a pleasure to be here.
Yes. I think someone in the questions, but we're going to talk about the questions as well. They wanted to understand what is a consultant and what does a consultant do. They even said that you must give some examples,
Okay. I mean, so it might be worth clarifying. Even though I'm a senior consultant, what I primarily do is audit support work, or what they call us audit specialists. And so the primary bulk of my work is in supporting the audit team by doing specialist work in the space of credit risk modeling. But I mean, consulting, broadly speaking, kind of can encapsulate parts of that. But it's about solving client problems. And I'm going to only speak from the perspective of my unique experience and the speciality that I kind of exist in. And so what you'll find is that often our clients are banks or financial institutions, and they'll come to you and say, we've got such and such a problem. And a typical problem is something like, we need help kind of building a model or evaluating our models, or we need kind of support in terms of figuring out whether or not our models align with regulations and or standards, or whether or not they are robust in the context of what the market is, broadly speaking, doing. And so it's the role of consultants to kind of look at your business or look at your department and just figure out, in terms of the expertise that we can provide, how can we best solve the specific problem you're bringing towards us. So for me personally, in my day-to-day, that would be kind of evaluating credit risk models for the purposes of impairment auditing.
Oh, so it is more like a problem solving. And then I can imagine it's so diverse because, I can imagine like different problems from different, sort of clients and stuff like that.
It is. I mean, it's very diverse, not only in terms of the different kinds of problems you can get from different kinds of clients. I don't want to necessarily paint a narrow image here, especially because I'm one type of specialist, which is credit risk modeling. There are like a plethora of other kinds of specialists who also do specialized consulting work. And so really, one can't get away from giving a very vague, kind of generalization where you say consulting is simply, the exercise of providing solutions to clients. And some people might feel like that's not necessarily specific enough.
Yeah, I want us to get. I want us to actually start off with this, because I remember when I was doing my honors. Actually, I thought I was going to be a consultant. I was searching there, like, what am I going to do after this? I was like, actually, I'm going to be a consultant, because the job description sort of, it was appealing to me. But before we get into that, let me just make a proper introduction before we get into. I have a thing of forgetting to do it's called due diligence, and we just start talking. So today I'm joined by Tshegofatso Freddy Sehlapelo, like I said, who is a senior consultant in credit risk at Delloite. He has a BSc in mathematics. And yeah, we're going to also speak about some of the roles that you have held before, some roles in data science, etc., etc. But let's pick up on the consulting part. right? So how then does someone get into this field of consulting?
I mean, from my experience, I transitioned from industry. So I was in a bank, and so I developed my uh, expertise from working within the bank, and then I moved into consulting from there. But for other people, all of these institutions will have graduate programs, and you could just come straight out of varsity by just getting a job as like a trainee or a junior consultant or an intern. Each institution might have different, verbiage for what they'd call an entry level position, but there isn't a single path into consulting.
Perhaps the better qualifications. If somebody is at university and they're like, which qualifications can best equip me for a consultant role? Which one can you say those will be?
I think it might be worthwhile to kind of narrow the scope of the question. And because
Mm-hmm.
I happen to be sitting in a department that looks at uh, financial risk and provides kind of like financial service consulting work. And so if you're in a different field, then the answer would look differently because, we work um, with tax experts and other kind of, financial experts. But in my department, most of the people come from a quantitative background, which will be in things like actuarial science, mathematics, mathematical statistics, um, for other finance disciplines like financial management or risk management. And so anything in that general space, can and probably will equip you to kind of work within a financial kind of services space.
So you did maths,
Yes.
right? A BSc in mathematics at UP. When I was doing
Yes.
maths, I didn't know like what am I gonna do with it, And I remember people were stressing me. Like people would always ask me, "So, Chief, what are you gonna do after this? What are you gonna work as? Are you gonna be a mathematician and stuff like that?" And there's a problem that a lot of people who study maths has, and we're gonna touch based on that. But I just want to know that did that help in the current role that you are in as a consultant? You having had studied maths.
Yes, I mean 100%. I mean, geez, it's one of those things where you kind of don't see you kind of don't see a direct link necessarily, because it's not like I'm at work, solving, differential equations. I'm not sitting there, looking at matrix algebra necessarily, but all of that creates a a foundation of like quantitative kind of skill sets. It creates a foundation where of problem solving. It creates a foundation of familiarity with just problem solving that I use on a day-to-day basis. So 100%. It kind of helps there. I'm trying to think of a more concrete example, but I mean, I do, some light statistics pretty much every day. When you do kind of data analytic work, you've got to have a strong understanding of statistical concepts. You've got to have a strong understanding of, just how to formulate problems in a numeric way, because you're often dealing with actual calculations, whether it's forecasting or predicting. You have to have that vocabulary that comes with having studied a quantitative field.
So in your in I mean having mentioning that I'm now you know I want you to actually give the audience some sort of a clear, I mean, in your line of work as a consultant, so probably
Mm-mm,
get to the office. You actually also work from home, as
mm-mm.
you once told me. So, like on your day to day, how does your day look, and what kind of problems are you solving, and what are the tools? Like, maybe just give us a clear picture for someone who might be
Okay,
interested in
okay.
this line
I
of
mean,
work.
for me specifically, I'm in the financial services advisory team. Specifically, I'm in the credit team. And so what we look at is evaluating or auditing credit risk models. And the bulk of that generally tends to look like auditing ECL models, expected credit loss models, that is, impairment models, provision models. And so usually you'll have a client in front of you, which will be a financial institution, and you've got, about anything from 2 to 6 months working on a project. And the goal really is to go through their model documentation, understand exactly what they're doing and why they're doing it, and to what extent does it align with regulations and best practice within the field. And so there's a lot of document review, and there's a lot of kind of literature analysis of the client's work. And then you then get the data sets and you get the actual models, and you kind of dig into the data and you dig into the actual models. And when I say the actual models, I mean usually you're looking at some kind of script that might be in SAS. Most of the banks and financial institutions tend to do their programming or their model building in SAS, and sometimes it'll be in an Excel spreadsheet or a collection of Excel spreadsheets. So my day traditionally looks like I've got a client, I've got a set of questions I need to answer for the audit team, and that involves investigating what the client's doing and whether or not there are any errors I can find, or any of evaluating their mathematical approach to the modeling they're doing at any given time. And so usually I've got a SAS script open, I've got a bunch of data sets open, I've got a bunch of Excels open, and it's just around reperforming some of the work that they've done. And other times it's about building challenges to what they've done. And so I spend a great deal of my day sitting with spreadsheets or spreadsheet adjacent kind of software in front of me.
You make it sound you make it sound so easy. I mean, I didn't understand a lot of the things you're saying. Obviously, but then I'm like, you getting into this role. I mean, were there any challenges, or you just got in like the way you just explained it? Like, I can say you're a pro in this, but like, how did you get there?
So first and foremost, I want to say anything sounds complicated when you're hearing it coming from somebody who's been doing it for quite a while. So I don't want anyone to kind of feel like it's this, difficult or unapproachable kind of discipline. It just requires, you can kind of learn almost anything just by doing it. But a great deal of the experience I had that kind of prepared me for the role I'm in was having worked in the bank. So before this, I worked at African Bank, and there I worked in the model development, so scorecard model development team. And my role there was kind of similar, whereas there I was building application scorecards. And so that's where I developed a lot of my SAS skills. And that's where I developed a lot of the vocabulary necessary to kind of understand, what what a financial modeling environment looks like for credit risk. And I was there for quite some time, and so that built up a lot of my education for me. But also on the side, you kind of take online courses, and there are certifications you can do in risk management, or in financial risk, in the financial risk space. And at some point, I enrolled in the FRM certification, and so that was a lot of academic reading to kind of orientate me into the kind of thinking or the kind of skills I might need to take up a role specifically in financial risk management. And so that's some of the stuff that I've kind of done over the years to put me in a position where a lot of the work I do is accessible and kind of approachable for me.
So was that always part of the plan to get into this financial role? Because it
No,
sounds very
no, no, no.
curated. It sounds very
No,
planned. I mean,
no,
from
no,
what
no,
you've
no, no,
said.
no, 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 no. And maybe this ties back into the conversation you alluded to earlier on when you speak about after I graduated, there was a period, before I got my first job where I was thinking to myself, what kind of jobs do I even apply to? You know, it's not like when you go on these job platforms, necessarily there's a role that says mathematician, adjacent employment jobs. And so it was kind of a difficult process trying to figure out how do I, search appropriately for the kinds of jobs that require the kind of skill sets I have. And so, luckily enough, I found a position as a digital data intern. And there, you kind of see the link how somebody in a quantitative space, like with the mathematics background, might fall into there. And so I did that for quite some time. The interesting part was this was for Doctors Without Borders, an NGO, and it's one of those things where, whenever I told people about what I was doing, the first thing that people think is, oh, so are you a doctor? And I'm like, no, no. They do employ like a bunch of other people who kind of do support work that isn't medical work. And so my role there was to kind of interpret and to help structure the analytics that related to the digital marketing that they were doing. And so you'll think about things like you've got an advertisement campaign going on, and you want to be able to track certain measures like how many people you're reaching, the cost to conversion rates, and other kind of analytical summations of a marketing campaign. But also, how effective are your communications? Are we getting the kind of reach we want? Are we pulling in the kind of attention we need to be? You'll do things like sentiment analysis on your engagements online. And so that was the kind of role I fulfilled there. The fun thing about that was that I was in a communications team. And so all of my coworkers were very creative people, journalists, social media experts. And these were the kind of people who I didn't envision when I was in university I would be working with. And so I think maybe I'm trying to touch on the idea that it wasn't a curated path. It's just I happened to find myself in that space. And then I pivoted after that and I got into an internship program where I was studying data science for some time. And so that funneled me in a particular direction that kind of leads up to the kind of work I started doing in the data science space. And then moving into a bank was also one of those things that was not necessarily curated. And so I ended up where I am through a series of kind of pivots.
I see. We're going to talk a lot about that, but I'm still stuck on the consulting part. I think there is an inner me. There is something in me because I wanted to be a consultant so bad. I remember reading about it and be like, so maybe this is my chance to find out more, to feed that inner child or that inner, I mean, that honors student when I was still an honors student. So, in fact, wait, let me get to the questions here because there was a question that came through. The question said that as a consultant, what does his job entail? I would appreciate if he gave an example using a hypothetical scenario or case study. Thanks. We'll be looking forward to this interview.
Okay. So a financial institution or an institution that provides credit in some way. This could be a retailer that has a facility that lets you take out credit. Comes and they might not have a credit risk modeling team in house. Maybe it's a small institution, or their primary business is something else. They're not a bank necessarily, and so they come to you and they come to you as a consultant and they say, we want a way to effectively calculate our credit risk, and we want to be able to, because regulations require that you hold a certain portion back in the event of a default. And so we want a robust way to kind of calculate all of these things. And they'd come to a consultant like a consultant, and they'll say, here is our historic data. Here are our books. We've had these many clients over this many time periods, and you get a lot of data sets, application information, payment histories, payment profiles. You might even get some bureau data coming in through there. And the brief will be develop a collection of models that can help us manage our credit risk. And so our roles is to come in, deeply understand the business. So you need to know exactly what this institution's business really is. How do they get their clients? What is the credit life cycle for their clients? How do they move through the various stages of the credit life cycle? what is the average life of a client here? What is the turnover rate? Things like that. You're thinking about what is the term of these kind of loan products, maybe if it's a loan product that they offer, or facility, whatever type of facility it is. And so you're going through a lot of documentation, a lot of policy. So it's not just necessarily mathematics or necessarily kind of calculations and coding. A lot of it is just policy, because there are quantitative policy decisions that come into play when you're dealing with credit and financial lending and things like that. And so what that could look like is us sitting there engaging, maybe once, twice a week, whatever the frequency is, with the core team there to understand their environment and to build a solution for them. And so you're just building risk models for them. And so this could look like building a probability of default model for them based on their data set. This could, look like building a behavioral scorecard for them, based on historic behavior from other clients. And so the scope of what you do can really look different depending on the specific questions that the client is looking for. But they give you the tools and the information, the data sets, and you're working with the particular environment, and what environment you're working with, it might not necessarily matter. This could be in an Excel environment. This could be in a SAS environment. It could be in a SQL database. This could, this could be Python kind of scripting. But the bones of what you're doing is just developing kind of a suite of models for them. And then that's your deliverable. Package that appropriately, and you can do some analysis to back test your results to make sure that those results align with historic outcomes, so that you kind of have to evidence the value or the accuracy of your model. And so one can imagine a lot of this is similar to the kinds of stuff you'll see in a statistics class. A lot of logistic regression, linear regression modeling, a lot of forecast modeling. And so that's the kind of work you'd be doing there.
So the kind of models and the way you make the models, are this only statistical models, or they get to be mathematical models? What kind of models are these?
I mean, statistical models, mathematical models. I mean, I don't. I don't know. Maybe you can help me here with distinguishing a mathematical model from like a statistical model. But some of these things are just standard formulas that are prescribed or by regulators, and so it's just about the creative and effective implementation of these standard or stock standard models. But also, just because you've got a stock standard kind of structure or model that's prescribed, how you can approach it with the specific data set you have, a lot of creativity comes into play. Especially because, think about something like the probability of default here. If you think about statistics, kind of 101, it's like the number of defaults you have over the total population that you kind of have. That's, but how it's in practice implemented in industry is vastly different from institution to institution, and there are a lot of nuance that can come into play. So there's a lot of complexity that can then be built upon, what at face value seems like, a simple calculation. And so there are ways to incorporate economic factors into there. And so you can kind of adjust for the state of the economy. There are ways to kind of inject, kind of forecast kind of elements into that, when you get into looking at, what are the probabilities now versus what the probabilities can look like in the future. And so there's a lot of interesting and kind of fun problem solving that can come into play here. And all of this varies vastly, depending on the kind of products you're looking at. An overdraft facility with something like a retailer can look very different to a car financing kind of a product, or different to a home loan, and other kinds of, you can get into other kinds of financial products that aren't even retail products necessarily. So there's a whole breadth of creativity, a breadth of variation as well in this space.
What is credit risk? Because I mean, you've spoken much about credit risk, and then to put it in layman perspective for someone who, okay, because I remember with me, I just wanted to be a consultant, but what I'm getting from you is that actually there are different facets to it, and there are different, you know, compartments to it, or different disciplines within the consulting space. So you are in
So
credit risk.
yes, yes, yes. So I mean, and again, and I think maybe that's a key distinction to make. Some of my coworkers, they work in valuations, and others work in capital markets. Others work in the fintech space, and that others work in other spaces. They are insurance specialists. And so there is a breadth of work that can be done in consulting for somebody who has a mathematical background. And so I think that's why my preference is not necessarily to kind of frame this as a conversation about consulting, but as a conversation about credit risk modeling specifically, because I don't want to create, like a false sense that this is all there is to do, because there is so many other kinds of professional consultants that exist out there. And so what I'm talking about is just, one possible path. But to answer your question, to kind of go back to what is credit risk? And maybe a simple example is, a personal loan. We're kind of all familiar with that. Is you go to a bank and you ask them for some money, and they need to figure out um, whether or not you are a credit worthy kind of client. They need to figure out what is the risk that you will not pay back the money and they will lose out. And so there are certain credit risk considerations that come into play at the point at which you're applying. And so usually, those are things where we kind of look at, your bureau scores, your payment histories, your income, your employment. And so there are models that can be developed at that stage that help a bank think, oh, Freddy has a 20% probability of default, and so there's a 20% chance we won't really recoup our money. And so that's important information for them to think about. And they will have internal policies to think about, these are the kinds of risk tolerances that we kind of have. We don't want to accept people which have a probability of default greater than this particular value. Some other considerations come into play are things like, well, if your risk is this high, maybe we'll limit the loan amount we can disperse to you. And so the higher your risk is, maybe we'll, instead of giving you 10,000, we'll give you 5,000 or 2,000. And so that's part of credit risk modeling and credit risk management there at that stage. Then, you can kind of get into things like behavioral modeling for credit risk is when we look at, now you're already a client. We want to be able to see what your ongoing risk is based on the behavior of people we already have on our books. And then the kind of work I do now when we talk about credit risk here, we're talking about financial reporting. And so when you think about a balance sheet, institutions have to report things like their, what do you call this? Their assets. And your loan book is an asset because it's an asset in that regard. And so part of regulations is that you've got to hold a certain level of money back in the event that your clients may or may not default. And so, we'd call that your impairment, or we'll call that a provision. So it's an amount of money that you kind of have to account for if your probability of, let's say, of your population defaulting is something like 20%. And the total loan value that you've issued out is like 1 million, maybe we need to kind of hold back something like 200K, to account for the defaults that we will foresee in the future. And a lot of modeling has to be done to get to all of these values. And so that's when you start getting into things like the probability of default, the exposure at default. So we know that your probability of default is 20% safe. I mean, that's ridiculously high, but fine. What is the expected exposure we might have at the point that you might default? That's also an important value, because obviously as time goes by, you pay back. And so we need to kind of figure out what is the expected time to default. Is another kind of model that we could build in the suite of models we built when we're trying to evaluate credit risk. And so I'm just mentioning some of these as some of the types of models that exist in the collection of all models that come together to create a credit risk kind of modeling suite, specifically in this case for expected credit loss. Other models that kind of can be included in that space are things like forward-looking models. We know what our client base kind of behavior was last year. We know what it might look like today, but we don't know what it might look like next year. And we know the economy kind of changes. Things like the interest rate have an impact on this. CPI might have an impact on this, and other kind of macroeconomic considerations might have an impact. And so we might want to attach some of these predictions to a measure of the economy. And so that's when you kind of get into like macroeconomic adjusted models. And so, I don't know if this kind of helps create a picture of, the collection of kind of models that can exist, or the kind of considerations that financial institutions might have when they want to think about how do we manage the credit risk we have. And so the risk of default, or the risk of non-payment, as a function of the fact that we've now issued out all of these loans.
Probability. So
I mean, that's I literally live in statistics, probabilities. That's where my head is at most of the time.
I'm laughing because I had a lecture this week, and we were talking about the probability of someone cheating. I had a student actually who was my classes are it's like we're in chillers. Like it's like you'd think if you get there, you'd think that these people are chilling, and we're doing a lot of maths. So we're talking about something, and this led to that, and then now we're talking about. I think there was a student who actually, I even wrote an article about this before, but the student was talking about the boyfriend cheated, so now he wants to take the boyfriend back. So now we're looking at that probability of an event, given that another event has happened, conditional probability.
Yes.
So we're analyzing that, and we're like, you shouldn't take him back. He's gonna cheat again. So it's quite interesting to hear you talking about probabilities. So you guys are the people who actually make the models for the banks when we go there to ask for loans, then we're getting rejected.
I mean, I don't like the way you phrased it. I mean, we are part of that. That's part of the decision making. There's a whole plethora of people who kind of play a role in that kind of one decision here. I mean, there are people who, like I said, there are regulatory considerations. There are business kind of considerations, and then there are modeling kind of statistical considerations, and it's a collection of all of these factors that come into play. And so you might see in a typical kind of application setting something like where we look at your bureau stuff. So that's about you. We look at regulations that says you can't over indebt people, because predatory lending is prohibited in this country. We can't you can't have a certain level of income and ask for a certain amount of money, and the monthly installments are a certain amount, and after we've taken our portion, you literally have nothing left, things like that. So there are all of these considerations, and we are just, one of the layers, that are in there to kind of help institutions make better decisions about who to give credit to and who not to.
But I would like this to be a very teachable moment to people that are going to be watching this. The people who follow my channel are people who are students and young professionals. So these are people who are career driven, etc., etc. We make mistakes, man, when we actually start working. Jiggy, I'm rolling with a 4-pipe. It's a GTI. It's credit. So you've been working with these things. You understand credit risk better. What advice can you give to us as general people who don't work with this stuff? What can you say?
I mean, that's a very difficult one, because I mean, there is the textbook kind of answer here, which is don't take out credit that you can afford. But we live in South Africa, and there are cultural and social considerations there as well. And then also, sometimes there's just not there's not an appropriate level of like financial literacy. So it can be a very touchy kind of space to kind of give advice here, because sometimes people make difficult decisions in a certain situation, and you don't have a choice, and you kind of have to do what you need to do. But let's assume that that's not the case. So let's assume that you're not in a precarious situation. You're not necessarily uh, uh, taking out a loan here because you have to. There's a lot of people who kind of take out unnecessary loans. We've got a credit kind of crisis in South Africa, I would say. There's a lot of people who are living lavishly when they don't need to, especially because you're financing a vehicle that you can't necessarily afford, and the level of the vehicle that you purchased, is not necessarily aligning either with your lifestyle or with your budget and your other obligations. And there's a little bit of kind of social wisdom that needs to come into play here, where we mentor and support each other to kind of make it okay for somebody to be like, because I mean, to be fair, I hear these things all the time where they're like, you've been working for 2 years now at this institution. Where's the car? We're not seeing the car. And people feel the pressure now. They feel the pressure, and now you need to show up, and people need to see that you're working. You've been studying for a long time. Maybe you come from a particular financial background, and you want to feel the weight of the fact that you're an employed person, and so you might tend to make poor decisions. And so I think it's just kind of like a societal thing where we need to kind of coach each other, and we also need to be uh, advising our friends and not pressurizing people to be doing things that we all kind of really know that this is not really the thing to be doing here. You shouldn't be taking out a loan so that you can go to a concert. You shouldn't really be taking out financing because you want to go out on dates. And I mean, these are very extreme examples, but people do this kind of thing.
Yeah, it's a very touchy subject, like you have mentioned.
No,
It's
it,
quite
it, it
touchy.
can be very personal. Finances, it's a
Yeah, it is. Back to consulting.
yes,
Um,
yes,
coding. Do you guys do code a
yes.
lot?
Um, yeah, yeah. We do a fair amount of coding. I mean, and not to scare people. So the kind of coding we do, um, is not the same kind of programming that computer scientists do, or that developers do. So nothing heavy like that. For those who have taken a statistics course or have taken a linear algebra course, often in mathematics, at the time when I was at UP, we did MATLAB for linear algebra, and we did SAS for statistics. Some institutions might do R, and so it's that kind of programming where it's just mathematical programming in a sense.
So it's if someone wants to get into this role or in consulting, what, and then they ask you like, what are sort of the recommended, coding languages that one should know?
I mean, so I would recommend that you be very comfortable in a database environment. Be familiar with something like SQL, and because most data sets sit in a SQL database, and you're gonna query it, so you need to be able to collect all of the necessary data that you need. And then I would recommend that you be familiar, if you're going to be working in a financial institution, especially one of the major banks in South Africa. They often do their modeling in SAS, and so that might be a key one there. But in general, if you're doing modeling work, you would also look at things like Python and R. Other institutions that aren't necessarily financial institutions, like the banks, would program in R or in Python. So those are the kind of programming languages that I would advise one gravitates to for analytic work. And so in your mind, if you think about Googling something like programming language for data analytics or data science, those are the kind of programming languages that would come up. SQL, uh, Python, R, SAS. So that's kind of what I've encountered in my career.
So how does consulting look like in different industries? Like you have had some experiences in the bank. You've worked in the bank. You are now in Delloite, which is a financial services institution or entity. Does consulting look the same across different industry?
I mean, I imagine yes. I mean, and I don't feel like it's fair to necessarily ask me that question because I have a very specific experience, and so it might be worthwhile to kind of maybe as an idea for a future guest to speak to somebody who has worked in different departments in a consulting firm. But from my experience, yes, the answer is it looks vastly different. There are there are consulting companies that focus solely on financial modeling. Then there are others that look at, you can get into the space of things like management consulting. There are consultants whose clients are other kinds of institutions that aren't necessarily financial institutions. Imagine you get a telecoms, or you get a multimedia company, and they might, they develop models as well. There are models in almost any modern space. There's model development that happens in the medical space, in the logistics space, in the retail space. And so I can imagine that there are consultants whose clients are all these other kinds of institutions, and they do vastly different kinds of modeling to the kinds of modeling I do. And so that might be worth thinking about. Sometimes, people are agnostic as to the kind of application of the mathematics they do. So some people are like, I like solving problems, I like working in Excel spreadsheets, I like building models. The industry I apply that to is immaterial. Give me a bank, give me a medical research institution, doesn't matter. I just like solving problems. But for other people, they might have a passion or a predisposition to a particular kind of industry. Maybe you really are into media, and so you want to work for a media institution. You might be into networking and telecoms, and so you might want to do that. And maybe somebody who has a passion for biology or medicine, might want to apply their analytical skills in that space. And more often than not, you don't need to be an expert in that sub-discipline. For example, you've got a very good quantitative background. A lot of these things you learn, from being in the space. And I mean, when I left varsity, I knew nothing about banking. I knew nothing about the credit lending space, and so this is knowledge you kind of get at the job. And so if you've got a vague interest in the medical space, and you've got a mathematics degree, it might be worthwhile kind of looking into what are the kinds of modeling or the kind of quantitative work that's done in that space, and maybe see if you can gravitate towards something like that.
So what I'm getting is that you guys are very much important because you guys solve problems, and then it means that the big part of your job actually is needed for key decision making, and and obviously it means that key decision making for whatever entity or whatever client, and it means that they do things right, and then their profit margins increase, etc., etc. So you guys should be making good money in this, I guess.
Uh, that's I mean, not to toot my own horn in terms of importance here. In any institution, I mean, really, the politically correct answer is everyone in every company plays a specific role. There is a value add that each role has, or else business wouldn't have it. Capitalism is not in the habit of creating redundant positions because it's not in the habit of losing money. So,
Yeah.
so really not to overinflate the importance of people in the quantitative space. But to be fair, we live in an age where really people want evidence. People want data-driven decision making. That's one of the key things that kind of are emerging. Is there is a space, and in some contexts, there's a lot of room for judgment and expert kind of input. But there's more and more the kind of call to have an empirical, objective kind of evidence for making a decision. I mean, remember back in the day, even credit evaluation for personal loans. There was a time, where it was there was a guy at the bank, and you sat with him with your bank statement one on one, and you told him your life story, and that individual decided whether or not you'll get a loan or not. There was a time where all of this was judgment based. And it based on, how you come across, what you look like, and the biases that individual comes into. So, all of these institutions, over time have kind of been pushing to move away from judgment-based decision making, where there is an alternative to data-driven kind of decision making. And so there's a strong importance and a strong reliance on evidence-based and data-driven decision making in all institutions, at all levels of decision making. But so I personally believe, that there's a good living that can be made in these quantitative spaces.
So one of the other reasons why being a consultant was so appealing to me at the time was the very poor me. I was looking at it from that angle because I had a lot of people saying consulting has a lot of money. If you want to get rich, be a consultant and stuff like that. So I was like, here's a solution, Is it like that?
I've also, I also grew up hearing these stories. You grow up. I mean, it's not just consulting. You'll hear the same things about, data scientists or actuaries and things like that. And the truth of the matter is, it can be true for a subset of people in that space. It really can be. Even if you look at something like, these websites where people can look at PayScale or Glassdoor or something like that, and you kind of look up things like the average salary of a model developer, quantitative analyst, business analyst. It's going to be wide. The range is really going to be wide, especially because we often use words like a data scientist or a consultant, when really there are sub-disciplines, and a banking consultant can make vastly different from somebody who's consulting in the medical space. And so it's not really fair to kind of throw these blanket dreams at people. You kind of have to be very specific, because now, here I am. I went into this because I was told consulting's got money, but I found myself in a specific institution at a specific level for a specific industry where that's not necessarily the case, where you make a good living in South Africa, but it's not the grandiose numbers that we kind of sometimes hear people speaking about.
Yeah, no, I think that's the perspective, and like the thing about money, and obviously going for those jobs that have a lot of money, or we hear that a lot of money, and then we get inside and we get disappointed. Like, how can't where's the money now?
I mean, it's a very unfair and kind of contentious thing in South Africa as well. There can be in some institutions a lot of pay disparities. Hey, in some institutions, you'll hear these rumors going around where they'll say people who at face value are doing the same kind of work get paid vastly different. So, that's also another hot button topic as well in the world of working. So those are things, I guess, to kind of think about also. But if you really, really want to know these kinds of things, I think one really has to do their research, really fine tune at this position, at this institution, at this level. What are the realistic ranges here that they look like? And some of these numbers, usually they'll tell you, hey, people in this space make this kind of money, but they're giving you an example of somebody who is a specialist or a department head, who's been in the space for 20 plus years. And so it's not that it's not true, but it's not what you'll be seeing at an entry level. And, you have to be lucky enough to be the few who move up the ranks, and, you want to become a junior, senior, specialist, manager, head of department, things like that. So, those are also other things you might want to take into consideration when you want to evaluate what space do I want to be, especially as it relates to the kind of money you can be making.
Let's talk about growth. Everyone who gets into any career they want to grow. They want growth or some level of growth. They want to be stagnant and stuff like that. How does growth look like in the consulting space?
There can be a lot of growth. They can, genuinely speaking, a lot of institutions, and the institution that I'm working at now, as well as one of those, where there is a strong focus on personal development. There is a strong focus on things like lifelong learning, and the motivation is always, don't be stagnant, constantly upskill yourself. So I mean, my colleagues are constantly, somebody is doing their masters, somebody is doing their honors, their PhD, people are doing professional certifications. People are constantly doing degrees for additional degrees, or studying for non-degree purposes. And so people who tend to be successful and people who tend to do well and move in their careers are people who really take ownership of their careers. It's and often you'll hear people will tell you that no one is gonna donate a promotion to you. No one is gonna come to you and say, here is the next level. Here, there will be guidelines, there will be HR policies, there will be frameworks for the minimum kind of things you need to do to move from one level to the next level. They'll tell you need this level of experience and you need to have shown this kind of competency before you move on. But really, if you really want to do well and you really want to progress, it's about taking personal ownership. I want to have a game plan. So if you come in, for example, as a, a graduate or a junior consultant, there'll be a vague roadmap that kind of exists, where the stereotypical path might say something like 3 or 4 years at this level, and then you qualify maybe to become a consultant a certain number of time at this level, and you have to show certain competencies before you can move on to maybe a senior consultant, manager, assistant manager, or above the ranks. There'll be a vague or there could be a very specific roadmap for how you can go from a junior all the way to a partner level. And that will be provided, all those things you can ask, but the key really here is taking ownership. Some institutions will have mentorship programs or other kinds of programs that kind of pair you with senior people, where they have a focus on really trying to develop you as best that they can. But even if an institution doesn't necessarily have an explicit program like that, it's really important, if you really want to be the kind of person who cares about your career, to reflect on these kinds of things. If you can find a mentor in your institution, as well as a mentor outside of your institution. So personally, I've got a bunch of mentors. So where I work, there are mentorship structures that exist, and so I've got internal mentors where I work. I also have personal mentors outside of work in my personal life, where I have relationships with certain professionals, both at my level or around my level, as well as significantly senior to me in other institutions who aren't necessarily in my field as well. One of my most important mentors is someone who isn't in my domain, but this is an individual who works in the financial space, who also works in a kind of non-related modeling space, and somebody who I trust, and somebody who I can kind of talk to about my career, talk to about the things I'm thinking about. Then they can kind of feed back to me advice. And so that's a really key important thing that I really believe in mentorship, and I believe in that kind of building that kind of community. And my ideal situation is that at a certain level, there are people you are mentoring. There are people who are mentoring you who are your peers, and there are people who are mentoring you who are senior to you. And that, coupled with taking ownership of your career, constantly developing, constantly growing, that's a sure way to really, really progress in your career.
There is actually a very great question that actually came here on YouTube from one subscriber. And let me just preface it like this. So you started as a data intern, a digital data intern at Doctors Without Borders, as you've mentioned. You were a data science intern at Expo Data Science Academy, and also a data science trainee at African Bank and assistant manager in data science. So you have been in the data science space before. How is this different from what you're doing now?
Um, it is quite different. It is quite different, but I think it's also worthwhile noting that, and maybe, there are better people to have this conversation with. Data science is a very broad field that can mean a lot of different things, and a lot of institutions have a different interpretation of what it is that a data science does. But for me, part of the key difference in the kind of work I do now to what one might consider traditional data science is the kinds of models one builds. So if you think of a stereotypical data science role, you're usually building machine learning models, or and these could include traditional statistical models where you think about logistic linear regression. That's within the scope of data science as well. But it tends to also lean to more sophisticated models beyond that. So then, and also in the data science space, there's often a reliance on developing new, novel, or innovative kind of modeling. Whereas the space I'm in is more traditional in a sense. Um, you know, a lot of the modeling that we do in finance is, a lot of financial modeling is very standard, and it's very, you can trace its history. There's a lot of creativity that can come into play on an individual institution kind of level, on an individual portfolio kind of level. But really speaking, if you think of um, financial models, um, that's a different kind of beast to open-ended data science kind of broad modeling. It's less, so my space is more regulated. There are guidances, whereas if you're in a traditional data science space, um, there isn't as much regulation if you're not specifically building models for the financial space, or for consumers in a lending context. I mean, I don't know if
So
that kind of answers the question for you there.
it does. It does. Actually, I was gonna link it to a question here. There's a question here from a subscriber. It says, "What inspired the move from data science to credit risk?"
I so I was a data scientist at African Bank, and the scope of my work was still credit risk modeling. It just happens to be that they're not necessarily mutually exclusive, things. It's not a vastly different thing. It just, it could tend to do with how an institution chooses to define certain roles, but also part of it is the breadth of kinds of models you are allowed to build. And so you'll find in a traditional data science space, there was a little bit more of a, a push for pushing the limits or innovating the kinds of um, modeling we were allowing ourselves to do, um, even in a credit context. So there's still a lot of there's a lot of bleeding edge work that's still done in the credit space. That's strongly the domain of data science. I mean, I don't think I can really get into specific examples here, but you can imagine that institutions now have a plethora of data. Traditionally speaking, we use, bureau data in the credit space. But, when you're dealing with, data science, and you're dealing with innovating in a credit space, you could imagine the kind of work you're doing there is thinking about what are other ways we can solve the same problem, but looking at the more emergent kind of data sources, looking in other places. Whereas now there's a little bit more traditional kind of modeling frameworks around the work I do now. But maybe let me take a step back and say the reason I moved, for me it was really about expanding the kind of experience I had, and especially with consulting and working at a consulting firm, is you aren't married to the employer you're currently at. Over a 3-month period or in the context of a year, you will encounter many different clients, and so you get the opportunity to work with and work on different products, different modeling environments, different programming environments sometimes, and different methodologies. So it's constantly exposing you to the different ways in which other institutions are doing things. And so there's a huge value proposition there from an experience perspective. It's fun, it's challenging, it's interesting. I'm constantly having to reorientate my thinking because, 6 months ago, I was working on home financing. Now I'm working on vehicle financing. Now I'm working on a large institution. And then the next thing, I'm working on a smaller institution that, has different problems. And so their solutions are different, and the way in which they engage with their data and their modeling environment is also different. And so if you're the kind of person who loves a new challenge, who loves changing things up and really looking at different institutions regularly, then maybe consulting might be for you, because there's that variability that's embedded in the fact that you're constantly dealing with different clients. And so that was very appealing to me.